Early in 2024, Lloyds Banking Group's profitability fell by 28% as competition increased for deposits and mortgages. Pre-tax profits for the bank from January to March were £1.6 billion, compared to £2.3 billion in the same period previous year. The increased rivalry among lenders to provide better offers to pinched buyers was the reason behind Lloyds' statement that its margins had been affected, mainly within UK mortgages. The largest lender in the UK also made more money from credit cards and auto financing than from commercial loans. The company, which owns Halifax and Bank of Scotland, reported a 10% decline in net interest income, or the difference between the amount it receives from loans and the amount it pays out for deposits, in the 3 months ending at the end of March. The decline was anticipated as mortgage rates loosened due to increased competition among lenders and more consumers transferred their funds to savings accounts with better returns. According to Russ Mould, investment director at AJ Bell, the company has seen competition in the mortgage market bring down its returns and savers move deposits into higher interest accounts, meaning it is paying out more to customers. The rise in interest rates over the past few years, which has enabled lenders to charge higher interest rates on loans, has helped improve Lloyds' earnings like it has other UK banks. Pre-tax earnings for Lloyds surged to £7.5 billion for the entire year 2023, exceeding projections and rising 57% from 2022. As the Bank of England has raised its base interest rate in an effort to lower inflation, a measure of price increases over time, borrowing costs have grown. However, Mr. Mould said that Lloyds' brief moment in the sun, when rates moved sharply higher and it was able to generate higher margins, seems to have come to an end. Lenders slashed rates dramatically in January as a result of competition for business, but the cost of borrowing money to purchase a home has remained higher than what many people have been accustomed to over the previous 10 years. Although rate cuts by the Bank of England are anticipated this year, several lenders have started to raise mortgage rates recently due to speculation about when these changes would occur. Rivals of Lloyds, including HSBC, NatWest, and Barclays, all increased fixed-term loan rates, albeit not across the board, since financial markets anticipated that an interest rate reduction would take longer than anticipated. Lloyds stated that it continued to believe that the bank would reduce interest rates 3 times by 0.25 percentage points before the end of 2024. Should this occur, rates would drop from 5.25% to 4.5%. Wednesday saw an average of 5.83% for 2-year fixed mortgages and 5.41% for 5-year mortgages. According to Lloyds' most recent findings, more consumers are continuing to transfer money from the current accounts to savings accounts. The company added that it had to pay an extra £100 million for employee severance benefits following a recent round of layoffs, in addition to greater operating expenses in the first quarter of 2024 due to a new Bank of England levy on lenders that affected the entire sector. It said that it has not added any more funds to the £450 million it has already set aside to cover the possible costs of the UK Financial Regulator's inquiry into vehicle lending transactions. The Financial Conduct Authority, FCA, began an investigation into whether consumers had been overpaying for automobiles in January. Client tenacity. Although Lloyds' profit decline seems substantial from this time last year, Matt Britzman, a stock analyst at investment firm Hargreaves Lansdown, noted that it was anticipated. Chief Executive Charlie Nunn of Lloyds said the bank was continuing to support customers, and that the quarterly results gave the business further confidence about its strategic aspirations. In addition to revealing its most recent financial results, Lloyds also provided housing price projections. According to the association, housing prices should increase by 1.5% in 2024 and by the same amount on average over the following 4 years. Separately on Wednesday, Heathrow Airport said that its profits before taxes for the 3 months ended March 31 had increased dramatically to £189 million from a £60 million deficit during the same period the previous year. Approximately 18.5 million people passed through the largest airport in the UK in the beginning of 2024, largely due to increased business travel to Delhi and Mumbai in India as well as heavy traffic from North America. It has stated that this summer will be the busiest on record, and that it has a robust operating plan in place to keep the airport running smoothly, even if unnecessary industrial action materializes. The travel company Jet2 reported that 55% of their summer season has already been sold, with ahead reservations for package holiday clients up 13% and flight-only travelers up more than 18%.